Good morning, everyone. Good morning. If you guys could give me a quick mic check, that would be great. Let me know you guys can see the NASDAQ 15-minute chart. And the audio's coming through clear before we get into it here. All good. Thank you, Anita. Hadid, hello, hello. Awesome. Hey, Tyler. What's up, brother? Anita, hello, hello. Ghost FX. Joe, what's going on, brother? AD, ICT, and Adora Trading both live today. Here we go. I'm here. Awesome. Awesome. Yeah, it'll be an interesting morning session. Awesome, guys. So yeah, we got the first, not first live stream, but the first live stream over live price action of this year. So looking forward to it. Looking forward to it. And we're gonna be doing a bit more of this going into these next few weeks, getting live here with you guys. So I need ICT takes too much mental capital to watch now. Oh, my man ICT. My man ICT. Rich. Good morning, my man. Batty looking for what today? We're about to get into that. My man Batty, straight to business. He wants to know what we're looking for. Let's go ahead and get into it. Abraham, brother, could we send a message to Twitter? Let them know by way of Twitter that we're live, my man. All right. Got 61 people in here for the first live stream. Not bad. Yes, looks like ICT has some real competition on YouTube today, huh? Let me go ahead and get my layouts straightened out, and we'll go ahead and get to it. Glad to see everyone here. We are happy to have you, Denisha. Christopher, glad to have you, brother. DXY looking strong, absolutely. Yeah, that's definitely something we're going to be taking a look at here. So let's go ahead and start with the dollar. I'm not going to be going too much into the analysis, but just sharing what we're looking at, right? So we've been watching dollar from Sunday stream. We've been bullish, so we traded this fair value gap on Tuesday. So you could be potentially seeing some type of low of the week form in dollar. I like how we took out previous day's low, and we were unable to get to that midpoint, and now we're rallying. So that's something that would pump the brakes on me looking to be a buyer on indices because of how strong we're rallying. And that's something I'm measuring intraday on one of my other monitors where I'm watching the intraday price action. So just something to monitor moving forward, and want to see if dollar wants to make a run above this swing high. How we run above that swing high, how energetic we are when we get there, those are all things to factor in. But again, we've been in this nasty consolidation, which we've been pretty much standing clear of. So then we dropped lower out of that consolidation, clearing out the sell stops here. So I'll be interested to see if they want to run up to these relative equal highs here, here, and here. So for the folks trading currencies, that would probably translate to euro making a run down here, and pound, I don't even want to touch pound because that daily chart. So that's what we're looking at on the foreign exchange front. So we'll see what we get there, and we'll have to see what DXY does, because that's going to, again, give me more confirmation to whether or not I want to be a short seller or a buyer of stock indices. Benjamin, is your signal service starting soon? Yes, sir. Second week of February, Benjamin. All right, so that's what we're looking at here on dollar. So we'll go ahead and take that off. There's no need to look at that one anymore. But yeah, again, we're just watching to run above these sides. That's what I'm expecting on dollar. You know, that fair value gap breaker after taking out the stops, making a London low of day. So we're going to see if we get a classic buy day. And if we get strength on the upside, then that would be something that would be interesting to see if we get lower prices on the stock indices. So for key levels, I do not have a lot of levels on my chart. I write them down on my iPad. So I have an iPad with all my levels that I'm working with. But one thing you want to monitor is the 50%, this wick. So you see that's made our high of day. So seeing that sensitivity come in there, that's something that is noteworthy. And then this inefficiency from here to here, I have the midpoint and then those quadrants labeled as key levels for my intraday trading when time becomes a factor. And we're about to get into that 9:30 open here at 9:30. So we got about 5 minutes till then. And then we have some high impact news at 10 o'clock. That's so. All right, guys. So I'm not going to be paying attention to the chat as much, especially when I'm over live price action, especially if I'm doing my trading. I'm going to be dialed in. But before we get into everything, again, I shared the disclaimer, which probably not paying too much attention to, but I will say it once more. Take accountability for everything you're doing. I'm just talking about candlesticks here. If you decide to make a financial decision based off of that, that's something you have to own. You have to take responsibility for all that. I am not a financial advisor, and I'm not giving you financial advice. So this is just my opinion, what I'm doing, and what works for me. So be responsible with what you're doing. Just because I don't need my inbox filled up if I take a stop loss, which is nothing to me. But if you're over leveraged, well, your account could be gone. So just to avoid any of that, just be responsible and make your own financial decisions as adults. So with that, just wanted to cover the disclaimer and say it just to make sure we're protected here. So we're in this consolidation here on the hourly chart. So London dropped lower, cleared out that low, and then we made a run into a premium. But seeing how we were unable to sustain that, that's something that's interesting to me moving forward. And we still have all this inefficiency here on the upside delivery from the previous week. So what I'm going to be watching for is, do we trade above these stops here, reject and break down and make a deeper run into that, which is personally what I'm favoring, especially if we start to see acceleration higher on dollar. So again, nothing to take a trade on. Still going to probably watch the opening range, see the first 30 minutes, and then going into the 10 o'clock, hopefully we'll get a clean silver bullet setup, which is what I'm going in here looking for today. So let's drop down to that 15-minute chart and we'll get into the trade and layout. So there I just got a settlement price, just to let you guys know what the levels are, not hiding everything. That's that new week opening gap from this week, and still just gravitating near that. So that's something that's noteworthy. Regular trading hours gap, that closed, that's all I'm referring to as a settlement. So as we get closer to 9:30, that opening price, I drop that settlement on there because the algorithm tends to want to work towards that level, or if it doesn't, that tells me something in and of itself. So as we get close to 9:30, I drop that settlement on, and I use that as a tool to measure and gauge the strength or weakness of institutional order flow. So I'm going to see where we open here at 9:30. Let the opening range happen. Again, we're still in a consolidation. We're at all-time highs. So yeah, there's a lot of things going on that would warrant caution and more defensiveness because it's not one-sided, obvious like it was last week, for example, where it was really easy to see where the market was drawing to. The trading was very straightforward, easy to see the setups, hours in advance. Right now we don't have that because again, we're at all-time highs. We're still inside of this range here. So just taking it step by step. So that's what I'm watching here. So something to monitor would be, do we get a willingness to rally from this candle here? So here we have these last two up close candles. So what I'm monitoring going into whenever I'm reading order flow, I want to watch key levels that we're trading around that time of day, right? So if we're going to be bullish, we're going to rally from this breaker, right? But if we trade down through that, well, then that tells me something in and of itself. So because we are bullish on the higher time frame, monthly, weekly, daily, if I do take a short setup, it will be with significantly reduced leverage, simply because I don't want to be shorting bullish institutional order flow. And if I do, I'm going to do it with significantly reduced leverage, favoring buy setups, obviously because we're in a buy model on those higher time frames. So just something to keep in mind. So we're going to be watching that breaker. I'm not going to have it on my chart, but something to be paying attention to. And that last down close for the expansion higher. So does that give us a run above here? Or as we open here, we're going to have a gap on that regular trading hours from here to here. I'm going to study the willingness to want to reprice down into that. The midpoint, do we get down below it? And then we'll hopefully have the clarity that we need for the 10 to 11 o'clock window, which is what I'm looking for. Tommy Abraham, I got Discord open, gentlemen. Is everything good here on our end? All right, so we're about to get into the 9:30 open here in 5 seconds. So let's go ahead and get into the trading layout. So let's drop into a 1-minute chart. All good. Awesome. Thank you, gentlemen. All right, just about to be a surge in volatility right now, starting at 9:30. So again, we want to mark where we open. And why does it look like that? So from where we close the day before to where we open at 9:30, again, the market typically has a willingness to want to run into that, as we covered live here real time. So why is this so zoomed out? What's going on? All right. So market's working into that gap again. Told you guys it's a tendency around time of day for the market to want to work towards that settlement price. So that's something to monitor. I want to see how we trade inside that level. So something to keep in mind. I have a chart that visually shows that gap there, so I don't have it on this one, but it's something you want to be mindful of moving forward. So right off the bat, not the best market conditions at the open. Hopefully it'll work itself out. We got NASDAQ dropping, ES rallying right away. That's not something I like to see. So I'd want to see either NASDAQ rally, look to catch up with ES, or ES drop with NASDAQ, and just see that synchronization in the marketplace. Because unless we have that synchronized marketplace, I'm not looking to do my trading. So I'll typically just wait for it to work itself out. So looking for a run into that settlement price right there. None to take a trade on. I mean, we can see these price fluctuations ahead of time, but not everything constitutes a setup I'm willing to put a risk on. And then there's that settlement right from the 9:30 open. Beautiful. So now I want to see, how do we trade there, right? Do we bounce off that level, or do we just melt through it completely? You know, all those things give me insight into what we're looking at. Same thing here with that 15-minute chart, right? That breaker that we were looking at. You see how we just melted through that? All those are indications that allow me to read the order flow. So nice drop lower there at the 9:30 open. All right, so ES starting to sell off as well. And we got dollar really accelerating higher as we were expecting. So weakness in the indices, again, shared the underpinnings of how we had a strong dollar. And again, that's going to put pressure on indices. And then again, covering how on the hourly chart, right, we have all this inefficiency in here the market's going to want to work down into. So that's what I'm going to be looking for today. And then again, just seeing how we rejected off that midpoint of that wick, that is indicating weakness to me. So all these factors again come together to communicate, you know, what the market's doing, higher or lower. Man, why does it keep doing that? Sorry, for some reason I have to use the Chrome TradingView, unfortunately, because it won't let me use it on my PC and my Mac. I don't know why. I pay the premium, which is the most expensive option they offer to use it on several devices, but it's still giving me problems. All right, so we got the London lows here. That's something you'll want to mark out here. There's our London sell side. So market traded up to a premium of that 15-minute, and then we've broken down pretty aggressively, and then 9:30 just ripped lower. So we're going to see how we trade below that London Open. S&P is working into its gap right now, so I'm going to watch for a run into that sell side right there. So the fact that we broke down, right, no respect for any of these key discount levels, melting through the regular trading, all those things give me insight into we're seeing an underlyingly weak market, especially considering the acceleration we're seeing higher on the dollar. All right, so NASDAQ sweeping its London lows. So I want to see how we trade there moving forward. So none of this was anything for me personally to take a trade on. Like I said, we could see the levels it's going to, gravitating to this level here. Then we looked at the sell side, but seeing levels doesn't translate to trading, right? So being able to call levels is something completely different than actually taking a setup, taking risk, managing that risk within the targets you're looking for. So that's just not my model. Maybe it was some of yours, but I'm here looking for something very specific, and that's within that silver bullet window. Unless I get something very clear and obvious before that, but just being patient. It's still only Tuesday. We're still in the first 5 minutes of the opening range, so no real rush. No real rush. AB, member for 5 months. AB, appreciate the support, my man. Glad to have you. Hope you're having a fantastic morning, sir. So we see we have that gap here. Let me go and zoom out. Right, so from where we closed to where we open, again, we study the willingness of the market to do what? Reprice that level at 9:30. So now one thing I'm watching is how we trade inside this gap, right? Is it something that we hit, sell off? Then that would indicate to me that I can trust my sell models. We're going to see weakness. Or do we get back above that midpoint and show strength? Those are all things I'm monitoring. By the way, what I'm using is not any super secret notepad. It's just the key levels I'm writing down here, like the consequent encroachment, midpoint, all those key levels I want to see. All right, so the market ran down, swept the sell side, those London lows there. Now we're pulling back into the range. And just watching still. ES did not take out those lows, so that's something that's noteworthy. So we see NASDAQ repriced here lower, below those London lows, and we see even the S&P was unwilling to do that. It was not willing to make a lower low. But ES, as you can see on that 15-minute chart, not the best market structure. I'm sure many of you guys would agree. So again, that's why I'm not in any hurry. I haven't already taken 15 trades just because the market structure is not clean and it's not one-sided and obvious. And I'm okay. We may sit here all morning and not get a trade, right? That's not going to boost my viewership, but that's what I'm doing as a trader. Unless I get something that's one-sided, just completely obvious, I'm not touching it. And that's just the way I trade, especially because I'm putting down a lot more size on what I'm doing now as I'm growing into more capital. So, once you start managing more capital, the priority becomes risk management and taking sound, logical trades, not just chasing every fluctuation in price action. So structure's much cleaner on NASDAQ. So that's why I'm focusing on the NASDAQ today. I get that question a lot. Well, how do you know when to focus on ES or NQ? The structure on ES is abysmal. So I'm opting to look at NQ. So we're working that new week opening gap level again. Remember I told you guys still consolidating around that new week opening gap. That's something that's noteworthy. Why is that? Because as long as the market continues referring to new week opening gap, I'm not going to be looking for any large range expansion moves. So it'd be more bread and butter setups because it indicates to me we're likely in a consolidation profile. So looking at the 5-minute fair value gap, one thing to be observing here is we're trading back up into that 5-minute fair value gap. We're seeing a bullish dollar. So would that be some type of sell setup or short scenario? That's something I'm going to be studying going into this morning session. So what I'm monitoring is the willingness for us to want to trade there, right? So do we hit that level, break down, and then I can trust some type of sell model on a lower time frame? That's something I'm going to be observing and looking for. Because this low here on NASDAQ, that's a significant intermediate term low in terms of market structure, right? Because this already took out the stops here. It took out previous day's low, and then we traded higher. So the fact that this low was broken, that's a significant low being broken in my analysis. So again, just observing how we trade there. If we start to break down, start to show weakness, then that's something I would anticipate short setups manifesting. So we still got dollars screaming higher, making a run for the levels. So that first stage of buy side that I called out to you guys has been toasted. Man, I'd imagine the currency traders are having a party here, and I know most of you guys are futures, right? So we're going to go back down to that 1-minute chart, but just taking your attention to that 5-minute fair value gap. I'm monitoring the order flow that comes in there, right? So how do we trade at that level? Do we get above it, close, indicate strength, or do we show weakness and reject from that level? All things I'm watching. We're still early in the session, so nothing has me antsy to want to get in this market. After the first 30 minutes of trading, we usually get a lot more clarity as well in terms of what we're going to be looking for and moving forward. Papa Vlad, hello, sir. Matthew Davis, are we still in a consolidation profile or expansion? I think I've already covered that. Mayo King, hello, hello. What's going on, sir? So looking at ES again, just really sloppy structure in here, right? Not real structure delivery. So trying to take trades in this can be very problematic. So a lot of times we think of trading, we just want to focus on, the money making setups, getting in the trades, but it's an underrated skill set to avoid the bad setups because going through a day taking on no risk is a lot better than going into a day taking C plus D setups and winding up in drawdown. But again, that's something that people only appreciate once they've lost accounts and have churned up their equity. So again, as I said, we're watching that 5-minute fair value gap. I want to expect to see weakness come in from here and see if we want to make a lower low on the day and continue running. So that's what I'm going to be watching. You've still got 15 more minutes into the opening range. So opening range is the first 30 minutes of trading. So from 9:30 to 10 o'clock. So when I refer to the opening range, that's what I'm referring to. Joe Mahadeo, composure, very important. Absolutely. Absolutely. Especially when trading, it can be an emotionally exciting event for you, simply because you have to keep a clear head, think logically, and if you're excited on both ends, right? If you're pissed off you lost, super excited you won, that's not a good way that's gonna allow for longevity as a trader because it invites all that excitement and emotion, which is what we're trying to do away with and think logically about this, right? Not going on tilt, not getting upset, blowing accounts, stuff like that. So absolutely. And dialing back the trade frequency, that's something that's big for a lot of traders, not having to chase every single setup, just getting a few good setups a week. That's how you build consistently profitable. So the dollar's still making a run higher, and we're still seeing weakness come in around that 5-minute fair value gap and breaker. So let me go ahead and share this. So we have 5-minute fair value gap, 5-minute breaker, and we're trading inside that right now. So that's something I'm going to be watching to see, again, do we get that sell off lower? I like to see that respect to that new week opening gap. That's indicating weakness to me. I like to see that. And then the other thing to consider is 69. We also have that regular trading hours gap, consequent encroachment, that midpoint that we're rejecting right here as well. So a lot of weakness coming in at key levels where I'd be looking at it to come in at. So I'll be interested to see, again, do we get a displacement lower from here? But again, still looking at ES. NQ's consolidated near equilibrium, right? So from high to low, we're consolidated at equilibrium. Looking at E-mini S&P, we're still consolidated. So very important to understand the conditions you're trading in. And again, that's why I'm opting to let the opening range play out. Not like I said, not interested in just getting in here and jumping in a whole bunch of risk for no reason, especially this early in the week. So we got DXY still running higher. So that's, again, further confirmation with dollar running higher that we're going to likely see this act as a fair value gap that's going to send the market lower. And I'll share DXY here. So we'll look at the hourly chart right here. So there's that first stage of buy side that we called when we were down here. So that's been toasted. So I want to see, again, let's make a run for these highs here on dollar. That's what we're looking at. And again, that strength on dollar, I would want to see that manifest in form of weakness for the stock indices. So again, called this breaker, right? Fair value gap. You guys real time saying the market's going to use that as a launch pad to rocket higher. But again, looking at the hourly chart, again, structure is not the cleanest right now. And same thing on a 15-minute chart. So there's many days I would already be in a setup, or I would already have something that I would like to take a trade on. But on a day like this, not really seeing much here. but there will be much better days ahead. So, like I said, I'll sit with you guys here till around what do you say, 11 till the end of the morning session. So 5 minute chart. I put it on this big one. I know it's there, but I know that one's probably not the easiest to see. I don't know what monitors you guys are working with, but that's why I show it here for you guys to see. So we're trading up into this last up close here. So I'm wondering, how do we trade there, right? So that would be a key resistance level, just to use more classical terms. But that would be a key resistance level, that bearish order block, this last up close before this rotation lower. So hitting that, I'm studying the order flow that comes in around it, right? Do we hit that and sell off? Do we get above it? Those are all things I'm monitoring to probe the order flow. So again, still working that new week opening gap level. And this AM session's a snooze fest. If it's boring, it's right. So looking at this fair value gap here on a 1 minute chart, watching that right there. And that's also inside that 5 minute up close that we were just talking about. So just getting more information at this point. Getting more information. So we still got DXY, the dollar rallying. So I'll be interested to see if that puts pressure on indices as a result. But again, the market structure has to line up, right? And there's no structure in here that even constitutes a high probability trade for me. We have dollar rallying. We broke down aggressively. But again, the structure we're seeing in here isn't conducive to trading, at least for my models, and again for what I'm doing here. So again, that's something that's really, really important as well. And it's not just, okay, dollars rallying, let's just jump into shorts, right? There has to be market structure, a model, an idea around why indices should even sell off to begin with. And we're just not really seeing that right now. But again, that's why I'm monitoring how we trade in these key levels, because again, we're still watching that that 5 minute fair value gap in here. We haven't yet closed above it, and all we're doing is working into that last up close here. So those are the key levels I'm monitoring. And that's really going to be the two most influential levels for this session, right? So if we show weakness from these key levels and start to break down, that would indicate to me that we're likely going to sell off for this session. If we get above that and we start closing above this bearish order block, then that would indicate that we're likely going to see higher prices. So it's really just a matter of qualifying these things. Not that I'm trading the breakout higher or lower, but it's just how I'm reading the order flow candle by candle. Paul, that's midnight open. Yeah, that is the midnight open. Correct. Walter, that's a great question. So I'll go ahead and take one question while still got what about 6 minutes for the opening range. Why are you not shorting this fair value gap? Isn't it technically a 2022 model? The pattern is there, Walter, which is a good point. I know you see the pattern, but I'm not really in the business of trading patterns. That's not something I like to do. There has to be a narrative, a context, a reason supporting why I'd even trust a specific pattern. So my community isn't really going into the market looking for a pattern. That's not how I train my students to look at price. And that's not how I look at price action either, because that's what fails a lot of traders, right? It's just looking for some type of pattern in the marketplace. But once you have a higher time frame idea, you have intermarket analysis supporting it, you have the market structure in price action that's supporting lower prices, then you can trust those patterns. So that's a good question there, Walter. Like, for example, if we drop down to this 1 minute chart and go to ES, right? This is why I'm not really trusting my patterns, because it's not as high probability of an environment. So on a 15-minute, we got an aggressive wick lower, taking out all the trailed stops here. We've pulled back into the range, and now we're getting above all these key levels. So we're opening up the 10 o'clock hour here in about 5 minutes. Radif, my man. Been some time, brother. Good to hear from you. Glad to hear you're still alive, my man. Since dollar and indices aren't one-to-one inversely correlated, how do you decide to use it for confirmation? So they're not one-to-one, but what you'll notice in your studies and in your back testing is that the best setups that form in S&P, NASDAQ, or any of the indices is going to form when dollar is moving in the opposite direction. So that's going to create what's called a low resistance liquidity run, which is where the market's running really easily and there's clean setups, right? So that's the condition I look for, and that I teach is high probability when we have them moving diametrically opposed. They don't need to, as we see dollar's been rallying and indices have been catching a little bit of a bid as well. So it's not always one-to-one, but your best trades, your best low resistance setups are going to form when we have them moving in the opposite direction. So that's how I use that. And again, we just still got ES sideways, right? So this is market structure that tells me to sit still. Why? Because if I would be getting in here trusting my patterns, I'm more likely to get stopped out, right? So again, I'm focusing more on the risk side of the equation because I don't want to take unnecessary risks that I don't need to. That's not high probability. I'm okay getting stopped out. I'm fine being wrong and incorrect on a high probability trade. So there's such thing as good losses, and taking a loss in this market structure would not be considered a good loss. I have to take myself to the woodshed in my journaling or on my reflection in my journaling after the session if I were to take a trade in this, just because again, it's not high probability. Look at that 5-minute chart on NASDAQ. So it's still trading around these key levels. So again, still watching that. We got the 10 o'clock candle opening soon, but the 5-minute chart on ES. So that just speaks for itself, right? But again, the reason we're seeing that is because, like I took your attention to on a higher time frame on the 15-minute, what's the high probability market structure in here? What's the market indicating? Nothing. So, by understanding these factors, I probably saved you guys quite a few losing trades today, just avoiding these lower probability conditions. I mean, it's not flashy, but this is the stuff that keeps you, or that keeps your equity, right? Because we can all find winning trades, we can all make money, but it's on these difficult days, this is when accounts get blown, So if you already have the discipline to see it ahead of time, or have the ability to see it ahead of time and the discipline to not over leverage it, now we're talking. Now we're talking. So again, this fair value gap we've been monitoring. So we traded into that. So high, 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 and now we're breaking down. So I want to see how we trade through this low, right? Is it just an anemic run and then continue higher? Or do we just aggressively break down through it and then we see the bottom fall out? So we got 10 o'clock candle opening here in about 20 seconds. So again, still working that new week opening gap level and that regular trading hours gap, right? So here we have the close and then the open from today's session. And all we're doing is working inside that gap, right? So let me go ahead and illustrate that with a box here. So what have we done that was noteworthy today? Nothing. All I've done was work the low end of that gap right there, trade to the high end, and all we're doing is working inside that gap, referring to the new week opening gap. So why am I not trusting my patterns right now? Because the market's telling me it's consolidating. So still inside these levels here. So one of the things I like to do a lot as a scalper is, okay, maybe the daily chart isn't clear. So like that daily bias would be more difficult to ascertain. So maybe that daily chart isn't clear. All I need to know is where that hourly candlestick's going. And if I can predict the expansion of this hourly candle, I can trade that in my lower time frames. But even in the structure we're seeing right now, it's not that clear. Gun to my head type situation, I see us hitting this up close and selling off for this down close candle. So I'd be more inclined to trust sell models, but in the lower time frame, the structure really isn't there to support anything. So even reading the hourly chart isn't as easy as it normally is for me. So if that's the case, if I'm really straining myself to analyze the market one-sided, that's the surest indication it's not very high probability. But again, still giving you guys a gun to my head type scenario. If I had to tell you where this candle is going higher or lower, I'd expect it to go low, just based off this structure. But again, I already told you guys this would be a day I'm sizing down if I'm trading. I would not be taking my full leverage because if I am going short, that's what counter the higher time frame institutional order flow, which is clearly bullish. So again, you don't want to be shorting bullish markets very heavy-handedly because you're just asking for the markets to catch you with your pants down. Oh shit. Dang, how long was I muted for? I didn't even realize I muted myself. Okay, appreciate you letting me know, Tommy. Oh, it just got muted? Okay. Wasn't muted for like 15 minutes or anything. Oh, okay. Okay, cool. Yeah, appreciate you guys letting me know. All good now? Okay, appreciate it. All right, thank you guys. So yeah, as we were saying, so on the 5-minute chart here, we've been watching, the fair value gap here, this inefficiency, and this last up close. So again, just seeing if there's a willingness to want to break down from there. Again, we haven't seen any displacement, and that's when I like to trade. I like to trade when there's displacement in the marketplace because that confirms what? That there's institutional sponsorship in the marketplace, but we're not seeing that right now. So trusting my sell models, trusting my buy models isn't going to be effective. So it's not just a matter of, okay, let me pick a pattern, like it, and then just look for that every day. Not saying you shouldn't just look for one model, which you should be, but what you shouldn't be doing is just blindly trusting a model. You got to understand context, narrative. And if I were trading inside the slot here in NASDAQ or an E-mini S&P, I'm more likely to get stopped out. So if I know that, it's probably a better decision to just not put myself in risk, right? I've had a very good year so far, with decent gains across all my accounts. So there's no need for me to really push it. But again, still studying that 5-minute chart in here. And those key levels, see if we get a breakdown from that. And if we get a displacement through short-term low, and we really break away from that new week opening gap, then that would interest me in terms of looking for potential short setups. But right now, the market structure is indicating 50-50 to me. Yeah, market's not doing much of anything, so I'll take a few questions. Do you have a Discord group? Yes, sir, but the Discord is closed for now. We will be opening it for the community come July. So after the 6th month of the year, we'll be opening that up to everybody to join our community and the insights that I'm sharing there. And we are opening up our signal service come second week of February. Sandman, based on market structure and intermarket analysis, I'm seeing this week as bullish, but not sure we put in the weekly low yet. Yeah, and that's what I'm monitoring as well. So if you were able to watch the Sunday live stream I did, I'm expecting bullishness to continue. I'm not calling a top on the indices. I'm not looking to short them. I'm just trading the order flow we're seeing, which is higher prices, right? But we need to see that low manifest. We need to see the structure that aligns with time that supports, a low of the week even being priced in. So that's what I'm looking at. Dollar is bullish, but indices can rally with them. And again, I'm not looking to call a top in this marketplace. So that's my thoughts. Dan, if you take a loss in a setup, do you take another trade? If you see the setup, it's still viable, or you call it a day and focus on the next day? That's a great question, Dan. So for my risk management, I'm able to take up to 3 trades in one day. The first trade would be, I guess, full leverage. But then if I do take a stop on the second one, I'm reducing that leverage in half. And then on the second trade, I keep it at the same leverage. So I'm not willing to risk any more than 1% of my account in a day typically. So I'll risk 0.5%, and then I'll risk 0.25%, and then another 0.25%. And that's how I'm doing my trading. So I'll take up to 3 losses in a day. So I'll take 3 stabs, and then if I get stopped out, I just have to know it's not my day and walk away, because there's always going to be more setups. And that's something that helps me out a lot. Alexander, hi Dylan. Where would Dan? Hopefully I covered your question, my man, because that's risk management's huge. Understanding when to walk away. At what point I'm not trading anymore. You gotta have definitely strict risk management protocols, and give you guys some insight on what I'm doing. Yeah, absolutely, Dan. Alexander, hi Dylan. Where would you form a short setup after displacement downside? Wouldn't it be disadvantageous because we're at a discount? If you look, Alexander, we're in a pretty deep premium, brother, here on a hourly chart. So I wouldn't look at this as discount at all. Man, I was hoping we'd get some clarity going into the 10 o'clock hour, but I guess we do have clarity, right? We're expecting the consolidation, not pushing buttons, getting all excited. So I guess that's pretty clear, huh? Yeah. You're welcome, Alexander. Saw one. Do you use weekly profiles patterns? Absolutely, yeah. I factor in weekly templates all the time, considering the low of the week, high of the week, and I'm calling that to my community on a weekly basis, what we're expecting to be the high, the low. I'm not looking at it in a pattern sense where, okay, this pattern makes sense here. There needs to be a narrative and a logic. which is derived from the economic calendar, time of day, and the market structure that aligns with the timing elements that we look for. So that's how I go about determining the weekly profiles. And then again, looking at ES, so the action hounds, the people that can't wait to get in risk, they're probably hating life, and that's unfortunate because we were able to see this ahead of time. And then the same thing here in NASDAQ, right? So no displacement, no institutional sponsorship. If that's not the case, if there's no institutional sponsorship, I don't want to be in there, right? I don't want to be assuming risk and getting chopped up for 30 minutes. So, and I was hoping we'd get a little more price movement today, but get some movement here on the first live stream. But man, market's not really giving me much to work with today. So all I'm waiting for is displacement, right? So whenever we get into a consolidation, I just wait for the market to displace higher or lower. I see I'm getting a few questions. Probably haven't been able to get to them all. Not ignoring your guys' questions. It's just highly demanding of me to keep all this organized with my trading, my analysis, and then also attend to the chat. January snooze fest. Yeah, Christopher. Exactly. Which is why we're not taking our clients into signals right now. So there's levels to this. There is levels to this for sure. But the fact that we have, equal highs built in here now, equal high here, 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 I wouldn't look at this like bear short or block go short or sell that just because we still have buy stops up there. But again, I wait for displacement. So whenever we're in a consolidation, I want to see the market displace higher or lower. And that's really the algorithm showing me tipping its hand in terms of the direction. But right now we just don't have that clarity. Which is fine. Sometimes just got to wait for more information. And you guys see, being patient, it pays. Because maybe I didn't put on a winning setup today. But we definitely did not take a losing one, right? Which is big. Man, I was thinking, okay, we had a smaller range day on Monday, got a medium impact news driver. Man, I was thinking we'd see something, but this is abysmal. Joe Mahadeo, this is a good lesson. Patience and looking for a good setup. Absolutely. Yeah, for those that are here to learn, you guys are getting tremendous value here. Because, these are the days where we churn accounts. These are the days when I would blow accounts as a younger man trying to push in market structure that the market's not going anywhere. People are like, man, we probably should have traded currencies today, man. So looking at that hourly chart on dollar, it's really nice delivery. That expansion higher for that 9 o'clock candle into that buy side as we were looking for. I don't think we poked above this one yet, but I'll look at that next. So we got this new hourly candle open. So open, low, high, close. So power of 3 bullish is what I'm looking for. So I want to see this candle expand higher. And then we'll see if it translates into weakness across indices. But again, for right now, there's not much there. And I could imagine a lot of YouTubers probably having a hard time today. Especially if they don't know this stuff. If I wasn't live streaming, I would be packing it up right now. I would not be sitting in this. But like I said, I hang out with you guys till 11, and probably saved you guys from some low probability setups. You know, the more I look at this structure. But yeah, hopefully we'll get something here. You know, and typically when the morning's consolidation, I'll just have to wait till that 10:50 macro window. That's typically when the market will start moving. So that's what I'm waiting for here patiently. And again, as I told you guys, we are at equilibrium with this range. So from high to low, we're just consolidating at equilibrium, right? That's not a high probability at all. We're just marking time sideways at equilibrium. So my patterns would fail me here, right? Like if I was trying to trade a fair value gap pattern or a order block pattern, right? You guys see how that would be not, it wouldn't be fruitful. Wouldn't be fruitful on a day like today. But the cool thing is the visibility, right? The ability to be able to see that the conditions aren't favorable, not assume risk. That's something that when I first started, I never knew this level of precision was even possible. And then again, it's just referring to what new week opening gap and the regular trading hours gap from the low to make that orange, that pink. So we're just working that regular trading hours gap and new week opening gap. So Discord community, when for the private students, when the market's in consolidation, what does it seek again? Something like fair value. I remember talking about something like the market refers to fair value, but I'm not sure. Tyler, fair value and retail Ricks, yeah. Anita, everyone hit that like button. Yeah, absolutely. If I saved you a stop loss today, please hit that like button. Please hit that like button because a lot of you guys just hang out here, get all the value, and you don't help a brother out. So let's change that. Hook me up with the like. It keeps me motivated to come out here and hang out with you guys even more. Tyler, I am not a retail Rick today. Every man has that day where they decide to become, or man and lady has that day where they decide not to become a retail Rick, and I'm glad it was today, Tyler. The Sandman, appreciate the time, Dylan, working on my patience and tape reading skills. Yep, this is how you learn. This is how you learn. Just tape reading it, watching, not having any risk. Because again, if you're putting on trades, all you're doing is worried about what? Man, I hope this shit doesn't stop me out. Please go to my take profit and stop consolidating. But what you're not doing is getting the experience, getting the chart time that allows you to come in here like me and be confident that, okay, there's no setup to be taken. So I don't need to force anything. I don't need to put myself in risk because the market's telling me what it's going to consolidate. The algorithm's not broken. You know, the market's doing exactly what it's coded to do. If it's not going to expand, it's going to do what? It's going to consolidate, right? What's it going to consolidate near? The algorithmic reference points that it refers to, right? New week opening gap, this level, which is Friday's close and Sunday's open. And then this regular trading hours gap here. And all we've been doing is banging around in here. And again, what are we waiting for? Some type of displacement, higher or lower, right? Paul P, dude, your weekly market reviews have been incredible, super helpful, and your videos are extremely clear. I need your discipline. One day at a time, Paul. One day at a time, my man. And glad to see you're headed in the right direction. You're definitely in the right company. Scotty, thank you for sharing your knowledge. You're keeping me out of the stop loss. Awesome, Scotty. That's always a good thing. Sandman, thank you. Thanks for the support, brother. Much appreciated. Thank you, sir. But yeah, so being disciplined, having the ability to not take a trade, that's something that every profitable trader reaches. And, unless you have that discipline, you can be a good analyst. You can take winning trades, you can see winning setups. But if you can't keep that capital on a day like today, you're never going to be consistently profitable. So, developing the skill set that I'm teaching you guys here, which is patience. Maybe I'll miss a little bit of a run and that's fine. I'm not here to chase every single price run. I'm here to get in one-sided, high probability market conditions, right? And that's how I justify it. It needs to be one-sided. You need to be able to see clearly where it's going, top down. So doing top-down analysis. And then when all those things come into alignment, only then will I even consider taking a trade. But unless I know where the market's going on some higher time frame level, and the market structure supports that in a lower time frame, there's nothing to take a trade on. And if you guys would adopt that in your logic, you guys would see your trading percentage, your success would skyrocket. And then ES, same thing here, right? So it's really, really crummy price action, and that's typical of January. The real dance hasn't even started yet. We're not even in February. So working below the short-term low here now. But again, still no displacement, no inefficiencies, no aggressive moves higher or lower. So I want to see how we trade there. Do we break down through it aggressively, or do we take out those stops and pull back up into the range and then reach for buy side? That's what I'm determining right now. So if we see ES is not doing what it's not meeting it and making lower lows. So we have markets that are not in sync. So if we look at Dow, Dow's doing what? Dow's going higher. Nasdaq's dropping down. And ES is finding its purpose in life somewhere in the middle, right? So all those factors that we even touched on before we even hit the 9:30 opening bell, or as we were going into the 9:30 opening bell, we were saying how the markets were decoupled, right? We had Dow doing its own thing, ES doing its own thing, Nasdaq doing its own thing. So all those factors come together and tell me what it's just not that high probability of a session. Capital preservation, rule number one. So that 5 minute chart working into that bearish order block, bodies all respecting what level? That opening price here. So respecting that opening price, I like that. And then we're working our way lower. So if we start to get all the averages moving in agreement and we start to get that sell off, I would be interested in potentially looking to take a short here on the on the indices. So we'll watch this fair value gap here. And I want to see this act as inversion, right? So I want to see us get below it, use it as resistance, and sell off. So let me go ahead and make that purple. But again, for there to be anything high probability, we do need the markets moving in tandem. So seeing ES drop lower, that's nice. And we're seeing Dow work lower as well. So we have an SMT there. We see NASDAQ did not make a higher high here, whereas the Dow did. And ES did as well. So there's our SMT. 10-15, yeah. So we'll be watching this fair value gap, see if it lends some type of resistance and get us a run below that intraday low. So we have a fair value gap here. Go ahead and mark this inefficiency here. That we're about to get on this candle close. So study that. We'll study that as like our silver bullet short setup. Invalidation level would go above that up close candle. So again, this would not be a high leverage setup. This would be very low leverage because of all the factors that we're discussing. We do have dollar ripping higher, which gives us further intermarket confirmation as to why this market should sell off. So that's what I'm watching here. And let's go ahead and take that on here. Let's see if I can take a trade setup, create new order. 3, sell, market. There we go. So let's roll a buy stop on there. And again, stop has to go above this high here. So we'll look for create new order on a limit. So we'll get a limit order here at, no, it has to be a buy. So just 20 points from the entry. So entry price was at 443. So 20 points below that would be 23 here. So again, just some low-hanging fruit, 20 points from this inefficiency. That's what I'm looking for. So I want to see this fair value gap there be our AM session silver bullet and provide us with a sell-off into a new low of day. That's what I'm looking for here. So we got the acceleration higher on dollar that we'd be looking for. So everything lines up for this trade setup here. And again, if it does run up and hit that stop, that'd probably be my only trade of the day, just because I don't want to risk a lot of money in a condition like this. So this up close, that's the last line in the sand. So if we get above that, it'll just take me out on a stop, and that's fine. So again, in days like this, you have to size down. So it's not something that's emotional or exciting. So if it does tag that stop, doesn't make or break my career as a trader, right? All right, so taking me out there at a small stop, going in with reduced leverage. So that would probably be my only setup for today, unless we get something else that's really clear. So got the rules I was waiting for, followed my model, and that's one of those okay losses, right? We consolidated, we broke down, we got what we're looking for in the dollar, right? So we have dollar ripping above the highs. So everything lined up. So that's not one of those, and H. That's not a stop loss I'm necessarily upset with, because those are those good losses. So that's part of the game. So small stop here. But like I said, such thing as good losses and bad losses. And every winning trader is going to take stop losses, but it's how you handle it, right? So am I going to go back in here, over leverage, insist on being right? Or am I just going to take a small stop out and keep it moving forward? Dan, very transparent trader. Appreciate that. Appreciate that. Yeah, the industry definitely needs some transparency. That's for sure. So given that I got stopped out here, what usually a stop out gives me is more information. So if it was a cleaner day and like I got stopped out here, for example, when I get stopped out, that's something that's telling me that market direction is probably changing, right? Because my stop usually is at a significant invalidation level. So the fact that it invalidated my stop here, I would typically look at that as, okay, I just paid a premium for more intel. So now the market's telling me what we're likely bullish. So I would look to take a long and just reverse it. I would make it back, maybe slightly positive, and then I'd just be done for the session. That's what it would look like in an ideal day. But because of what we're seeing here in the market conditions, lower probability. Again, it all leads to me not wanting to assume more risk. But again, so looking at the 15-minute, sloppy wick lower. So again, I wanted to see more acceleration on the downside, but again, we're still just working around that midpoint. And that was something that, early on for me as a trader, once I would take a stop, would be something that would be more upsetting for me because I didn't have a professional mindset. I didn't know that winning trades happen literally every week, and you just got to be patient enough to wait for them. But as a younger man, that was something I struggled with a lot, taking losses and just cutting it there. But over time, we're getting better at this, seeing myself be consistent. And I'm focused on being profitable at the end of the week, at the end of the month, right? So it's still Tuesday, so a lot of time left in the week and the month. And I'm significantly up total on the month. But what I'm trying to get at is one trade is not make or breaking my trading career. So 5-minute chart, we got the weakness signatures we were looking for, so respecting that bearish order block, and then we broke down. And then we just didn't really get any more follow through or continuation, which is unfortunate. So if we look here at DXY, so DXY is traded to all of our targets. So buy side was delivered handsomely on dollar from here. So again, that translates to what in euro? Remember when we were up here, I told you guys euro was likely going to want to run for these lows. So in hindsight, probably should have traded the currency market, but is what it is. But once you have a model, once you have something that works and you trust it, there's never a reason to be concerned. And the more time I spent in this industry learning how it works, the less you care about a stop loss because you realize how irrelevant it is in the grand scheme of your trading career. But yeah, that's probably going to pack it in for me. And here I'll show you guys why. Looking at the 5-minute chart here, we'll go on regular trading hours. So I was thinking we were going to break out of this range here. Not that I'm necessarily trading the breakout. We wouldn't anticipate it, right? But market's just not doing that here on NQ. And if we go to ES, it's even worse, right? So knowing when to walk away, knowing when it's just not a high probability day. And I think, from all the trades I took on the stream, I think we're up if you look at all of them. But you're only up if you know, again, how to cut those losers short and not add to a losing day. And being able to take a small loss and walk away, that's something that's going to happen. But what I would do when I was less experienced is I would go short, take a stop, go long, take a stop, and then go short again, and then probably get stopped out again just because it's a consolidation. So avoiding that, waited through the chop, saw the setup I liked, and then the market rolled back on my stop, which is, again, what it's more likely to do in these lower probability conditions. Again, just referring to new week opening gap and consolidating. Abraham looks great, bro. Just checking out the Discord. That looks really nice. So we'll sit here till this macro window here, so about 15 minutes, and then keep it rolling. So got that strength in dollar. Let me go ahead and look at DXY. Go up to that daily chart. Right, so we touched on how on that daily chart. Sorry. So as we were looking at here, so the market dropped, took out the low. So qualifying this as potential low of the week here, real time inside that daily fair value gap. And then we were saying we were starting to run above this swing high on the daily chart, right? So daily bias mapped out nicely. In dollar, just did not translate to weakness in the indices as I wanted to see, and that's going to happen. Mohammed ICT took 2 losses in his stream now. That's not like ICT to even be trading on his streams, but that's interesting. You know, it wasn't an easy day. It wasn't an easy day for everybody. You know, it wasn't easy for me. It probably wasn't as easy for my brother ICT. So made a run above these highs here, and it really wasn't easy for any school of logic. I mean, it doesn't matter what you trade. I mean, if you're trading a consolidation, you know, even the people trading, you know, the kangaroo tail pattern, I mean, even that's going to have some difficulty on a day like today, you know. But if it's a day where it's running, I mean, any strategy's more likely to work, which is why it's really important to realize that, you know, because would I have already taken 15 trades here and blown the rest of my account, you know, as a younger man? That's exactly what I would be doing, and it just would have been a bloodbath. But with the experience you have now, as you get better, as you learn more, you know, you understand how to move correctly, and you just have to be able to take a small loss, keep it what it is, and come back the next day. Because what we do here, it works every single day, as long as the market's not in a consolidation. So market ripping higher here on DXY. So again, what I'd be wanting to see now, as we talked about in the stream on Sunday, would be making a run above these highs. That's something that would interest me. Again, just still referring to that new week opening gap and that same regular trading gap. So, you know, unfortunately, the market's not giving me much to work with today. So, we'll wait till that macro window, see if we get a bit more movement, and see if we get some market structure potentially set up another setup. But if not, we'll just keep the small loss, keep it rolling, and I'll live stream another day here with you guys this week. Looking at the economic calendar, I want to come on here with the day with high impact news, like with like a red news driver. That would be more conducive to better price action. So thinking about that. Stream tomorrow. Let me think. Gotta look at my handy dandy calendar. Go ahead and tell you guys when I'll be on next. What about, so I got client meeting maybe Thursday or Friday. So I'll go. We'll look to do one Thursday or Friday. I'll let you guys know which day I'm thinking of doing, and I'll let you guys know a day in advance, like I did yesterday. I told you guys last night I'd get on here with you guys. Stream tomorrow? Yeah, I'd like to, Muhammad. I'd like to, but fortunately, got a packed schedule tomorrow, brother. So tomorrow probably not. Who knows? Maybe my schedule free up. Maybe I'll be able to make some time to come on here and hang out with you guys. But I'll let you guys know ahead of time. But more than likely, either Thursday or Friday. It's the Sandman, the kangaroo tail pattern gets him every time. Yeah. AT Gamer. Friday seems cool. All right. Well, if you guys think so, if you guys think that's cool, then maybe we'll look to make it happen. AT Gamer, thank you for the stream today. Yeah, absolutely. Absolutely. So looking at present market structure, we closed above that new week opening gap. So we're likely going to want to run to these highs here. So if I was really dogmatic about trading today, which I'm not, so I'm not even going to look to make back my drawdown today because I'll probably just sit in that little bit of drawdown. If I really wanted to, I would look to get that as like an entry here in that new week opening gap or the dig down into that candle. So that would be a buy, which is a stop right below here. And then I would just look to make back the small loss I made running above this high here, here, and here. So if I was trading, which I'm not, and I'm not telling you guys to do that either, that's what I'd be looking for. That's how I would be trading this price action. That's just how I would look to mitigate the loss. But I would have to do it with, again, half the leverage. So, but not interested in opening up myself to more risk on a day like today. Matthew Davis. So why did you wait for the breaker and opening range to play out? Yeah, that's a great question. So I waited for the opening range to play out because the market structure is crap, right? So it's really bad market structure. And if you go to ES, you'll see the same thing, right? So in this consolidation, which is what we're in, right? From low to high, we've just been stuck here. There's nothing in this market structure that gives me confidence for trusting a classic buy day or trusting that we made the low of the week on Tuesday and I can just trust my buy models on a daily expansion higher. I just don't really have that same clarity, right? So because of that, I have to wait for more data points, right? So that's why I wait for the first 30 minutes of trading because then I'm able to see what is more than likely going to happen once I have that information to work with. So I was not looking at this like NQ. I was not looking at it as London low of the day. When we were here, I was calling the market into that regular trading gap. And then from there, we called it into the sell side, the London. One sec. I was looking for the market to run into the London lows. So I was not looking at this as like a classic buy day because the structure is not in price action for me to have any confidence to look for this market to be bullish or bearish. That's why, again, I have to wait for more information, submitting myself to that opening range. So hopefully that makes sense, Matthew. And again, this is really a mix of the market structure, time of day. None of this is very convincing that we've made a significant low for this week because, again, all we've really done was consolidate, right? So again, just more of a wait for more information type of thing. You know, it's not nothing like I covered at the beginning of the stream. You know, it's nothing I want to be overly excited about getting into a trade with. The market structure is not there. We're at all-time highs. Dollar's ripping. Indices are underlyingly bullish. So that's typically going to make more high resistance conditions. There's a lot of things coming together. You know, we're still in January as to why I'm not as aggressive to, okay, call this as the low of the week and rally higher. So there's a lot of factors you got to weigh in there, Matthew. Hopefully that covers your question for you, Matthew. So we got ES working its sell side. Yeah, so ES is starting to work below those lows, but not seeing that same weakness come into NASDAQ. Dow's really weak, which is probably why we're seeing that sell off. Yeah, that's why we're seeing that sell off in ES. So Dow's running, making new lower lows on the day. So we got about 6 minutes until this macro window. And hopefully we'll get some more movement there and then look to see if we get another potential trade setup. So Dow's working its sell side. ES trying to. And NASDAQ just stuck somewhere in the middle. Ahmed, two legends live streaming at once. I prefer Dylan. I do appreciate you, Ahmed. Respect, brother. Respect. Hey man, don't dog my man ICT for taking a couple stops on stream. Like I said, it's surprising that he even trades. Usually he just tape reads in front of people, but it's a tough day. It's a tough day, so you gotta cut my man ICT some slack just because my man shows out, you know. So when he's calling targets, when he's trading, you know, a lot of respect for what he does. So only respect for my man ICT. So finally getting the market moving a little bit. So 5 minutes till we get into this macro window. The fact that we're seeing swing lows, or excuse me, swing highs start to build in lower, that's making me lean more towards bearish market structure. But again, the market has to move for us as traders, right? So, you know, all these tools, all these, you know, the order block, the fair value gap, selling off from there, like we've been looking for, you know, all those things are nice, but there has to be something in market structure that I can position myself in terms of low risk, high probability. Alicia, any trade today yet? Just one. One stop on the silver bullet short. Ahmed, you went to work on crude oil, my man. How was not been taking putting too much attention on crude oil. Let's see what, because I was looking at that daily chart, and when I see a daily chart like this, I remember I was asked on stream a couple weeks ago to take a look at oil. And again, I don't like looking at markets like this because you guys want longer term targets, and I mean, if they're there, I'll make them available. I mean, I think we slapped crude oil around pretty silly last year on this run higher and stuff, but there needs to be clear market structure, right? So unless you're a scalper, like Ahmed, I'm sure you are. You took a long, so I'm sure you were scalping that setup. You know, as a scalper, there's setups in this, but I'm sure as hell not going to call targets in this for you guys, right? Because then you guys are going to think that's high probability, and then my results wouldn't be what they are. Again, if I was calling markets like this, same thing with British pound. So being able to recognize, you know, low probability is really big. Took a long from 73.7. So yeah, I'm sure you were just running above this buy side, or no. So yeah, inside bar on crude oil. So yeah, even crude oil sleeping. Mohammed, can oil be added to the weekly review? It's not that I don't want to. I would take a look at a lot more markets for you guys, but the thing is, you know, for me to look at a market, there's a lot of things I have to consider. You know, there's a reason my targets get hit, right? It's because I put a lot into each analysis. So to keep the Sunday reviews, you know, within around 60 minutes, what I do is take a look at everything I want to look at, and then I'll take a few suggestions in terms of what markets you guys want to look at. But I usually do look at crude oil when it's moving. When markets are moving, I'll place my interest there. And if I'm looking at it for my trading, which I do, like I don't just trade. I also have long-term investing accounts, different accounts that I'm working. And if I see opportunity, I'm going to be all over it. And then if I'm actively watching something like the commodity markets, I'll usually make that opinion available to you guys, which is what I've been doing last year. So, Mohammed, if you ask, or if a few people ask me for oil in the Sunday streams, I'll definitely look to add them. Yeah, there you go, Ahmed. Exactly. Yeah, Med's a long time viewer, so he knows his stuff. He knows his stuff. So again, wait for volume to come in. Dylan usually covers oil from time to time. It's just not the right point in time. Absolutely. So as we were saying, ES poking down below that sell side there. So we got about 50 seconds till the macro window. See if we get some movement here. So Dow still selling off. NASDAQ still consolidating, working those same key levels. I'm at DXY disrespected the weekly order block. Yes, sir. Yes, sir. That's why for DXY we were looking for higher prices. So that daily swing high, That was the first target that we called out on this live stream here today. Looking at those equal highs to the 4 hour, the ones you mentioned, yeah, that's what I'm watching as well. Yeah, that's my upside draw in dollar, but it really depends on how we trade above that high, right? So if we go to that daily chart, a lot of bullish signatures in here, right? We traded down, we were unable to even trade the midpoint, which is bullish, and then we took out this high. So what I want to see is how we trade above this high. So I want to see just an aggressive run higher, not like hit that high and then pull back down into the range aggressively. Because if we do that, that's not as bullish. So I'd want to see it smoke that high and aggressively run for the buy side here. And then I would look to potentially position myself for shorts in the euro. Man, which would have been really nice right here. Yeah, just a really nice delivery here for euro. So that Judas making that high a day, London Open, clearing the buy stops. So repricing to that premium at time of day. So right, so it's offering that premium price and flooding the market with that buy with those buy stops at 2 o'clock when smart money's expecting those shorts to come in. Market breaks down, and then this is where we were at. I think when we started the stream here, yeah, around 9:30, and then looking for the run to these lows here. So that's what I like to see, right? So if we're going to be bearish, if we're going to continue selling off for the remainder of this week, that's how we should trade below this low, not like an anemic run. I want to see us just completely wash out, because then that's going to give me confidence to look for lower prices and trade into this old order flow in here. All right, so we're in that macro window now. Let's go ahead and see what we get. So whenever there's a consolidation morning, again, I'll typically wait for the macro, but that doesn't always mean the macro has to move, right? So what I look for is specific signatures that the market's going to start displacing, right? So displacement, inefficiency, that tells me that the market is more likely to continue moving. So if I get those signatures within time of day, then I'll look to trade it. But if we still keep consolidating within the macro window, that's one of the clearest algorithmic signatures that the market is not going to be moving. Yes, sir, AD. That's what I'm saying. Yeah. To have that market symmetry, took out that low. Yeah, that's what I'm looking at as well, AD. So even though not the most eventful day, it's still pretty neat, having these key levels on the chart and seeing the market just gravitate to it back and forth, showing that even in a consolidation day, we're not really lost in the price action. So seeing the bodies now start to respect this regular trading, this settlement. So that's something that's interesting. That's noteworthy. So let's look at this fair value gap here. If we close below that, then I would likely want to see this be an inversion and potentially use that as resistance and sell off in the new low of day. But going to be very demanding of price action if I do anything else today, just because, again, these conditions aren't conditions I want to be risking a lot of money in. Wait for the better days. So let's say, for example, the move lower we were looking for today happens in the lunch hour or at 1 o'clock when I'm at the gym lifting weights. That's fine. Again, one of the things that is hard for newer traders to understand is that you're not going to participate in every single price fluctuation, and you don't need to, right? Remember why we're here. We're here to make money, not trade every single price fluctuation. So if I close up shop here at 11 because I don't see anything I like, and then the market just goes on a massive tear at noon, I don't care, right? I'm here to trade models that have statistics behind them that tell me that over the long run, over a sample size of 10 trades, 20 trades, 100 trades, I'm going to be up. And that's what I'm here to do, is execute those models when they're in their highest probability. And those are the conditions I'm looking to do my trading. So if I get stopped out once and I'm able to identify, oh, well, this isn't probably one of the best days to be doing my trading, that's a day when I would walk away, keep the loss very small. Because from you guys see from my winning days, small losing days, nothing. But the key is keeping it small, not letting that losing day evolve into a bigger losing day, more drawdown, because now you're undoing all the progress you've done weeks before. So I've done that before. Like, just for example, look at this year. I've had a fairly decent past 3 weeks of trading. And again, not going to talk about numbers because that's all personal business, but fairly decent week of trading, right? The past few weeks. So am I going to open up my ass to the market and risk all this capital and then undo weeks worth of progress in one day? That's not smart money management, right? So recognizing the conditions, recognizing it's probably not the best day for me to be risking a lot of money in. That's something that most people only see value in after doing that damage to themselves, because early on it's don't even consider it, right? It's just get me into an entry. This is boring, make this market move. I want to trade, and I'm glad you guys think that of me, that I can move the market. But if the Nasdaq's going to consolidate, it's going to consolidate. But the key is recognizing it and knowing when to walk away from the table. Ahmed Diaz, you have a whole other level of risk management mindset. Great stuff, trying to implement the same to become a seasoned trader like yourself. Appreciate that, Ahmed. And you guys are in good company again. I'm not an action hound. I'm not looking to take 15 trades in a day if it's not there. There's days I'll do a lot more trading, but there has to be stuff that constitutes high probability. And that's how you get to the point of being a consistently profitable trader, like I was saying earlier. It's about the risk management. Because like I said, the winning days take care of themselves. Like, if you just know basic, algorithmic price theory, you guys are going to see that you can find winning setups, but it's those losers that grow. It's those losing days that spiral out of control. That's really what's keeping a lot of people from being consistently profitable. So what happens if you now prioritize your effort on risk management, right? Not losing a big chunk of your account in one day. So all those different things are things that people eventually learn that want to be professional money managers, want to trade full time. All those are characteristics that need to be developed. Patience, discipline, being able to sit still. AB, preach, brother. Preach. Minimal risk or none in this junk. Absolutely. And, we prefaced the day with that anyway, right? So I told you guys, before we even started trading that, if I were to take a trade today, especially a short setup, it would be with what? Half to very, very low leverage. And it wouldn't be something I'd be taking across all my different accounts, putting that risk on, like I said, several accounts, because that would then make it make it emotional. I wouldn't want to lose all that, especially in a day when it's not that high probability, right? So understanding market conditions, adapting your trading to the market conditions, those are all things that are important. Wouldn't make that on a YouTube video because that wouldn't get any views. But if you want to get profitable, if you want to be consistent, that's the secret right there. Mohammed, patience is a golden virtue. Absolutely. Wander, at what point would you recognize the consolidation? So we recognized the consolidation from the beginning of the session, right? We looked at the higher time frame market structure, wasn't really clear on a daily chart. Told you guys, the hourly chart wasn't really clear. I want to see what the opening range does. So we waited for all those data points, and then the market was still doing what? Referring to new week opening gap, referring to the regular trading hours gap. So when I see that, that's further confirmation that we're in consolidation. So remember what I told you guys what I was waiting for here? Displacement, right? I want to see the market move away aggressively from this price range here, and we just haven't done that. So those are, in simple terms, what indicated to us that we were able to recognize the consolidation. Ronnie, keep up the great work, brother. Been here since the beginning. Appreciate it, Ronnie. Glad to have you join us. Mohammed, push that like button, guys. Yes, please do. Very helpful to us here on the YouTube channel. All right, guys, so the macro window is a snooze fest. So like I prefaced it with before, it doesn't necessarily mean that it's a slam dunk. The macro has to start running, right? It's just more likely to. And I want to see that happen. But if it doesn't move, then that's one of the surest indications that the market's likely to consolidate. Which is logical, right? Because if we go up to this hourly chart, we've seen what? The market's been on a tear. So with what we know about price delivery, is it likely to trade higher and then Monday make like a new higher high and then, chase some type of long setups? That's why buying on Monday, or looking for shorts and trying to hit a home run just isn't a smart thing to do in this market profile. Why? Because we've already seen a huge run higher. So I wasn't even focused on trading that slop yesterday. I did a little bit of a teaching for my private students with trading, but in terms of my actual trading, pushing it on all my different accounts, really pushing size to the marketplace, I'm not doing that here. Why? Because we've already seen a huge run higher. We're at all-time highs, dollars rallying as well. So, again, what money manager that, is sane is thinking, let me just plunk myself into a whole lot of risk here. You know what I mean? So you have to look at the market from that point of view. And then there's going to be days where there's no action, and that's just part of trading. That's part of trading. And that's why trading is not something that's really exciting for me. It's just another day here at the office. What's exciting is the freedom, right? So I'm able to leave my office, sign out of YouTube, and get on over to the gym and enjoy a nice lunch after that. So that's what I do like about trading. But the trading itself isn't something that's exciting for me. Thank you, Dylan. Great insight. Thank you. Thank you. So, all right, guys. 11 o'clock. One low risk trade did not go in our favor. Man, that's fine. That's fine. Consolidation day. Likely going to stay here until we break away from this new week opening gap. So like we touched on before we even started trading, that whenever we're sitting at new week opening gap and we don't break away from it, what's the market going to do? Consolidate. And then for private students, I'll have a market review up for you guys later, but I don't even think it's really going to be necessary, right? Because we touched on this yesterday, and then the Tuesday before when I was teaching you guys consolidation profile, you guys can start to see how the logic is very fluid, right? So at a consolidation day, what's the market referring to? Fair value, right? Which is what I taught you guys, the new week opening gap and the regular trading hours. So as long as we remain in consolidation, the market's just going to gravitate to these levels, not really looking to run anywhere. So you have to be able to recognize these conditions, because not every condition is conducive to profit making, right? And that's something that's not easy for a lot of traders to understand, because we're just coming in here looking at, profit, profit, profit. But not every market condition is conducive to making profit, and being able to recognize that, step away, not open your ass to more risk. All those things are characteristics that you want to develop if you want longevity. What and how to build a good habits to replace. I assume you mean to replace bad habits. You want to listen to responsible people. So people that, one of the big things that I have to work with students when I work with them is undoing all the bad information they were given early on in their career, just like I was as well. That was one of the most difficult parts of my journey, was having to undo the brainwashing of all the bullshit we were taught coming up into this industry. Quit your job in 90 days, get rich quick, flipping accounts 1 to 100, taking 75 trades in a week, like all the ridiculous shit that we come into this industry seeing. What it does is it poisons our perception of what trading actually is. So by going on Twitter, going on YouTube, seeing all these irresponsible people that are just making money on YouTube, just making money teaching, they're not actually in here trading. A lot of people are listening to people like that, right? And they're not very equipped to guide you because they're not actually trading themselves. They're not actually making money. So one of the best things to do is, number one, listen to people that make sense. They have logic. If they're promising you get rich quick, or something that sounds too good to be true, it probably is. Another thing to put good habits is tape read, demo trade. Not demo trade if that's not in your development for that journey, but what does tape reading do? Just watching the tape. You don't realize it, but what you're doing is you're forging discipline, just watching the market, not impulsively, like a dog chasing cars, buying, selling, buying, selling. Like I told you guys I would be doing early on in my career, right? I said I would have got stopped out of a short here, I'd be buying. Then I'd get stopped out, and I'd be buying. And it'd just be a bloodbath. And it was just me, not stopping my own bleeding. And I just bleed out all my capital in one day. And you have to live the fight another day. You can't just, go balls to the wall and say, all right, it's today, it's going to make my trading career or nothing. You can't look at the markets like that, right? So those are all things that are going to help guide you into the right direction, Mohammed. But really just being around responsible people, that's really going to help you out. And not working too fast to make a lot of money, because that's where impulsiveness comes in. So if you learn and you get actually good at this, you see the impulsiveness just goes away, because I know what I'm waiting for. I know the signatures I'm looking for. If I don't get it, then there's just nothing to do. That's a really good question, Mohammed. Dan, very good tape reading today. Thank you. Yeah, absolutely. The pleasure's all mine. Glad you guys were joining. Ahmed, unreal professionalism. Dan, I agree. Appreciate you guys. Thank you. So yeah, I like this. A good community. We're getting hyped up on following the rules and building good habits, which is what make good traders. And glad to see the community in that direction, because that's what makes money. Being consistent and being professional. How was the view here? And it's pointing straight up. High speed trading, good session, Dylan. Much appreciated, sir. Absolutely. Ronnie, hit the like button, gents. I was watching ICT and lost lots with him. Well, that's your own decision, my man. If someone's live streaming and you take financial advice based off what they're saying, you're opening up yourself to that risk, and that's why I preface it when I start. Everyone has to be a responsible adult here and not blame their decision on somebody else. And one of the things that I was telling my private community yesterday was, you guys were going to see me get it wrong one day. Like there's a day when, believe it or not, I'm probably not going to be right. And as crazy as that sounds, that happened today. And it's, how do I pivot from that, right? Am I going back in here over leveraging? I'm going to come back in the afternoon and get it all back and double the risk so I can make it back in just a little move? No, you know what I mean? It's just a matter of knowing that, okay, today's not my day. Tomorrow will probably be better. Or if not tomorrow, then the next day. And then if I take 2 to 3 losing days consecutively, that's probably not my week. So I'll just cut trading for that week and then come back the following week. So it's just all about, managing risk and prioritizing that. Because again, the money just comes in, especially if you're good at this. But it's how do you stop the bleeding? Because if you bleed out, it doesn't matter how much damage you do if you're bleeding out all the time. Exactly. In these days, less loss is a win. I like that. I like that. Mohammed, thanks, Dylan. Absolutely. Joe, lesson learned. Eddie, learn not to trust anyone else with their trades and just focus on your analysis so you can take responsibility. Absolutely. If you want to be a trader, the best thing you can do is not care about what other people are saying. When you're learning, obviously, someone has to guide you, right? That's how you learn. That's how any high paying professionals learn, right? You have to work with somebody who knows what they're doing, right? And like shadow them and train with them, because that's how you learn. But once you get good at this, once you have your model, once you know what you're looking for and you've worked with somebody for a period of time, you just want to cut out the distractions, and dial in on what it is that you're looking for, because that's what really takes you to the next level. So that's a really good point, Eddie. So you can take responsibility, absolutely. And that's why trading's hard for a lot of people, because it requires you to do what? Take accountability. You have to realize that every decision you make, win or loss, is your decision, right? And that accountability isn't easy for people, especially with our society today where everybody wants to blame and not take any type of responsibility. So all those are good characteristics for professional money managers. Rich Carey, thank you, brother. Great insights and really appreciate you. Rich, the pleasure's all mine, brother. Eddie, I bet the algo is stream sniping ICT. Yeah, the market makers saw ICT and they're just like, yeah, let's just fuck with them today. Oh man, that's too funny. High speed trading, your calmness is encouraging. Yeah, it's nothing to get excited about. One losing day, like I said, I'm focused on the month. So when I'm looking at my TradeZella and I get that calendar that comes up and shows me my trading, I'm looking at that entire month of green, 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 red, green, green, red, green, and I'm looking at it like that. So one day isn't working me up at all, and it shouldn't. And if it is working you up, you have way too much risk on, or you're trading with money you can't lose. And if you're trading with scared money makes no money. AB, this is more valuable than any big win day. Absolutely. Absolutely. If I had something like this when I first started trading, someone walking me through these things, teaching me, okay, how do you take a loss? What's a good loss? How do you know what to wait for? When to stop? All those things. I definitely wish I had that type of guidance and encouragement, because it was just me left to my own devices bleeding out accounts every day. And, that pain's a good teacher. So that's why we're here. But you definitely don't want to learn that way. You just want to take sound advice for what it is and move correctly. But definitely, AB, I'm glad you can recognize the value in a day like today, because definitely, winning trades, that's easy. You guys can see me win trades, all day long. But handling adversity is what makes people professional. Ahmed, the market is your employer, but you're a consultant. You should work when you want to work, not when the market wants you to work. Absolutely. Absolutely. Christopher, thanks for today. Absolutely. Pleasure's all mine. Yeah, really great points there, man. Eddie, thanks, Dylan, for the column analysis today. Yeah, absolutely. McTony, scared money, don't make no money, bro. Absolutely. All right, so as much fun as I'm having with you guys here today, my fun meter is about pegged. Watching the market refer to new week opening gap. So, as much as I enjoyed our time here today, we'll look to do another one either Thursday or Friday. Maybe we'll sneak one in on Wednesday, and we'll look to do that. We'll see what we're doing. I definitely want to do one more for you guys this week, especially as we start going into our signal service, start February and all that. I want to put ourselves back out here on the map. So with that being said, again, appreciate all you guys joining. Christian, learn how to take a loss and move on. Appreciate your support, brother. Appreciate the support. Means more than you'd think. So thanks a lot there, brother. Appreciate you, Christian. Med, see you in the next live. Appreciate the value. Take care, brother. Absolutely. Pleasure's all mine, guys. So yeah, nothing for me to even leave you off with. Just wait for more information, and I'm taking it day by day. Not looking to push it a lot. Risk is low, and not looking to trade a whole lot. Taib, how many trades do you take in a week? It depends on the economic calendar, a lot of factors. Non-farm payroll week, I'm trading Monday. If I make money on Monday, I'm not trading the rest of the week. If I still don't get a setup on Monday, I'll wait till Tuesday, maybe Wednesday morning session, and that's it. Any other week, I'm predominantly doing my trading around high-impact news drivers. So that's when I'm typically doing my trading, is on those days when there's high-impact news drivers and the market's more predisposed to be moving. So I'll trade anywhere from really 3, maybe 4 days a week, depending on the economic calendar. Those are the days I'm really looking to push it. Anywhere from 3 to maybe 4 days a week, again, just depending on the market structure, economic calendar, all these different factors. Alrighty, everyone. Let me make sure I got everyone's. Earl, great stuff today as always. Thanks, Dylan, and the Dora staff, definitely. Yeah. Be sure to give a big thanks to our team here. Denisha, Anita, Abraham, Tommy, May, and appreciate all you guys' support and all the hard work. This wouldn't be possible without my lovely team here supporting me and making all this possible. So you guys can thank me. I appreciate that, but definitely be sure to thank our team that makes all this possible for you guys here. So till the next stream, like I said, I'll send out the schedule about a day before when I'm going to get on here with you guys on the YouTube. So till then, hope you guys have a great rest of your day. Good luck and good trading. Take care, everybody.